Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Earlier this week, I did a video that talked about how Virgin Galactic probably needs to raise about $2 billion more to get its Delta class spacecraft off the ground. They're not going to be built or operational until about 2026. That's really when cash flow could potentially be coming in for the company, but we're going to see a lot of cash burn in the meantime. And you have to actually fund the $50 to $60 million that it costs to build those spacecraft. Ironically, right after I recorded that video, it was announced that Virgin Galactic not only had sold over $100 million more in stock, but it also announced another $400 million registration to sell additional stock. So that's what I want to get into today, is what these two fundraisers are and how the mechanics of them work, how stock was sold over the last couple of months, and what that will look like going forward. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content and check out my newsletter, Asymmetric Investing, for coverage on high potential companies like Virgin Galactic. I want to go straight to the SEC reports. If you haven't looked at these before, they're a little bit dry, but they do give details on exactly what's going on from a fundraising standpoint. There was 3 reports that were filed on June 22nd. That's what I'm going to cover here. The first says that according to a distribution agency agreement dated August 4th, 2022, the company had sold a total of $300 million in shares of stock. Some of those sales, $135.4 million of which were sold before the quarter ended March 31st. But the additional $164.6 million was sold over the next little over 2 months, and there were 37.4 million shares sold. So that's a price of about $4.40 per share that Virgin Galactic got for selling that stock on the open market. This is what is called a shelf registration. Basically, it's just a registration that tells investors and the SEC the company can sell stock kind of at any given time that it wants. It's just a blanket registration. It's not a specific price that they're selling for. They can just sell into the open market. So that's the way that one worked. The other 2 filings were related to a new $400 million registration. So this is what's called a prospectus. And then here is the $400 million registration that is going to be handled by a variety of banks. They're actually the ones that are going to sell the stock into the market. And you can see that they can sell $400 million from time to time through agents acting as our agents or the principal. So basically, they can sell stock as they choose. They'll pay a little fee of about 2% to these banks for doing that work. But over time, Virgin Galactic will be able to raise about $400 million. So why would Virgin Galactic be doing this now? Well, they want to have that money from the previous sale before the next space flight happens. And then they want to have the ability to sell stock if the stock bounces after the space flight later this week. So it's basically opportunistic, both on a backwards looking basis and on a forward looking basis. If the stock does jump, I would expect the company to use that as an opportunity to sell another $400 or so million worth of stock, because in total, that would mean the company would have raised about $500 to $600 million in just the last few months. That is enough money to get Virgin Galactic through about another year of normal operating cash burn. So we'd get the company about through 2024. That's much closer to launching those Delta spacecraft. And now you can start talking about potentially interesting financing by financing with debt or convertible debt. So while dilution is never something that investors want to see, we do have to be aware that a company like Virgin Galactic is going to need a lot more money than it currently has on the balance sheet to get to a sustainable point. These moves that management is making is moving closer to that direction. The challenge is that the stock price is not very high, so these stock sales are actually very dilutive. This might be one reason to be a little bit hesitant on being too bullish on the stock until we can see some sort of positive free cash flow in the future, because it's potentially going to be the case that the company will have to dilute really heavily, as much as 50%, if the stock doesn't go anywhere, just to raise that $2 billion to get to cash flow positive operations sometime in 2026 or 2027. So just wanted to give a little background on exactly what's happened with this fundraising, the numbers that are thrown around with $300 million, $400 million raised. This should cover exactly what has happened over the last few months with the $300 million raise and then the $400 million of stock that might be sold in the future. Let me know if you have any thoughts or questions in the comments section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.